Hi, I'm Jordan Roy-Byrne, and I'm here in downtown, beautiful Vancouver, British Columbia. We're at the May 2019 Metals Investor Forum alongside Doug Ramshaw. He's the president of Minera Alamos. Doug, thank you for being here today.
Jordan, always a pleasure. Thank you.
Okay, Doug, for those who are not familiar with Minera Alamos, maybe you can give us a quick synopsis of the company.
Yeah, we'll keep it real quick. It's a Mexican-focused gold mine developer. We have 2 mines planned. The first one should be in production next year, and the year after, the second one coming on stream. Combined, they give us, an annualized production profile of, close to 100,000 ounces. And the secret to both of them is they're extremely low capital intensive.
And they're low operating cost as well.
Well, they are, yeah. I mean, having a mine that you can build for less than 10 million Canadian, is crucial. Having something which still can command decent operating margins, so that even in the worst of gold markets, we could be profitable is a great backstop. And obviously, I think the best way to take advantage of a gold market, as and when we hopefully get one, is to be producing the stuff. And that's our goal through 2020 and beyond.
Okay, so why don't you discuss where the money is going to come from to go from basically 0 to 100,000 ounces a year?
Sure, and it's one thing to have a low capex build. It's another to be able to point and say, there's the money to build it. And our largest shareholder is Osisko Gold Royalties. They own just over 13% of the company, and we will build the first mine working with Osisko on the royalty front. So we won't be going to the equity markets for that capex build. The second operation is slightly higher capex, roughly 4 times more, about 35 million Canadian. Osisko have rights to acquire a royalty on that one for 4% for 9 million Canadian. There's still the question of the other, 30 odd, 28 million Canadian required. That one will build with debt money, and it's a lot easier to take some debt on the books when you're cash flowing on the first operation. So virtually no equity will be required for that production profile.
And that second mine, that's the La Fortuna project, and I believe you had a PEA come out on that last year. So even though you have to raise more money for that, I mean, this is a low operating cost, high grade type of project that is going to be providing a very strong rate of return.
Yeah, it's got a 1-year payback. It's a 50,000 ounce a year operation with all-in sustaining costs in the PEA at $440 an ounce. So even if we say, okay, it's a PEA, maybe that we should apply more stringent cost structure to things moving forward, and you assume the costs are 20% more than that, we're looking at $550 an ounce, and that means that even in a $1,250 gold environment, we are not laughing all the way to the bank, but yeah, in reality, the treasury will balloon quite dramatically. I mean, Cormark Securities that initiated coverage of us just in March, they're forecasting by 2022 that our internal cash balance will be $90 million US. That's 4 times our current market capitalization. So yeah, it's a high margin project. And I think it shouldn't be looking at whether we like low grade or high grade. It should all be about the margin, and we're making sure that we're focusing on high margin assets.
And those projections are at $1,250 gold?
$1,250 gold.
So even if the gold price goes a little lower, or even $100 lower, I mean, nobody wants that, but even if that were to happen, that's not really going to affect the economics of these projects.
No, we stress tested 1,000 ounce gold. Like, where do we get at the bottom of this cycle? 1,070, somewhere around that it got down to. We'll stress test everything at 1,000 US, because we know in many ways the debt that we would take on from the banks for La Fortuna, they're going to stress test our project. I know, in fact, that they've stress tested our projects at 1,000 ounce gold and everything's fine. So I think that's really important.
Okay, we've covered a lot here, but what else would you like to mention that you think investors should know about?
I think one of the things that we have is something which is unfortunately lacking now in the big gold mining companies. For a long time, I think most people realize that the Barricks and the Newmonts of the world are so big that they don't have the organic growth that they had in their infancy and in the 90s and the early 2000s. In fact, now, to maintain their production rates, they're having to do M&A to keep it up there. So one of the things we offer is the really exciting organic production profile and growth of going from a 30,000 ounce a year producer to an 80,000 ounce a year producer to a 150,000 ounce a year producer over a few years. So we'll do well on that alone. And then if that's compounded by a gold price, which is what the Barricks and Newmonts need to have, improvements in their financial quarters, then obviously the numbers can get quite cartoonish quickly. So let's hope that we have a cartoon in our future. But yeah, it's really exciting for us to be part of this.
Doug, as we close, could you tell our audience where they can go to find out more information and how they can contact you?
Yeah, I've been talking to people today and saying I want to engage with our shareholders and potential shareholders. In fact, every press release we put out, my mobile number is on the bottom of that press release. There's nothing I like more than hearing from our shareholders. So on any press release from Minera Alamos, you'll be able to get my direct line, and it will be me and not a member of my staff picking up the phone. And all that information, along with so much more, is at our website at mineraalamos.com. And be happy to hear from plenty of shareholders in the future, I hope.
Thank you, Doug.
Thanks, John. Appreciate it.